right, good morning, everyone. Hey, it is Shooter Scott Henderson, and we are going to go through some charts and technical analysis and sort of our recap for the week, our town hall meeting. Of course, at the end of our presentation, please do review our disclosure. And let's start off right with the S&P 500 and via the SPY. Everybody see my chart? Somebody give me a 5x5. Say yes, no, maybe, yes. Okay, thank you, George. All right, so we're looking at a weekly chart of the SPY ETF. Okay. Now, currently, I've got my anchors highlighted at 535.84 and 607.81. Really, till we break below there, this really isn't a stop. It's like I don't even really want to re-look at it again because my target, we're going to hit at least this 618 at this point. I see. We got to have some kind of significant catalyst for us to break down from that in the midst of Mag 7 earnings. Now, that said, we've already started to see a little heat on worry with tariffs regarding semis. So, at this point, I just think we continue to build up here. And there is, one thing I come out to the monthly. There's a lot of potential upside here if we can get rid of the noise that's going on. So I have 3 wave counts that I have here. One, that this ends up being an ABC, and we end here right at the 618. Or this was a leading diagonal, and it ends about the same spot. Or this is a true impulse leg, and wave 1 isn't even in yet. In that case, we'll overshoot the 618. Then we'll get a decent pullback, and then we'll launch from there. That's sort of my thought there. I don't see that as changing too much. There's really not, we have to have a catalyst for this to break down at this point. There's just too much support below us for that to get taken out. All right, now let's look at the NASDAQ. Now I'm just going to jump right out to the monthly chart on this one now. Right now, my target is at 579.93. I have the anchor set at 413.07. and 544.75. Now, what I've also done on a few names versus using this price that was down here, I just found something close, a little bit further off the line, make it easier for you guys to post your anchors if you're looking at a daily chart, which I tend to post quite a little bit. Now, I do have one different outcome here. Now, in either case of the ABC patterns, in other words, this is an extended A and we get an equality C, which comes in right at the 618, or this was not an extended A and it was an equal A and we get an equal C, which should come in around 625. Now, that doesn't negate the potential for an extended or an elongated ABC, at least in the second version. If this is a shallow 5, which happens often in very euphoric pushes, it rolls over, you put in a little bit of a flag, and then you put in your C up here, and it's done. Now, the impulse is not anywhere near as aggressive as it is in the S&P. So we now are having some divergence in the view in the indexes. So that's something we want to keep in mind. So what it's basically telling us is that the S&P, as far as breadth, is actually a little better off than the NASDAQ. And we're seeing the same thing in the Russells as being a little bit better off than the NASDAQ. And even the Dow at this point is starting to catch up to that trend. So the weak sister right now tends to be the NASDAQ. And I think that has a lot to do, even with the Mag 7, I think it has a lot to do with the tariff concern. Now, one other outcome is that potentially we get a wedge up here, and that, roughly a WXYZ kind of pattern, where we consistently. So we will get a decent. This will be. If this plays out, it will be volatile. That will be challenging for us to play a little bit. So I hope it's one of these 3 and not this WXYZ, because that means we're going to have a lot of noise in the tape as far as, we're going to take a little bit of heat on any long positions that we have. So we want to watch, and this measures from our 2,325 high and our 4,125 low is where this first dip is. So if we don't get back above this 571, which is about where I don't think it'll extend much further than that, but it could still. It could be a much steeper kind of wedge, or maybe something even to this degree, because we have that slope a little bit, but I don't think that'll be the case. Usually when a wedge comes in at this later stage of the tape, it tends to be symmetrical. And this, to me, is my vision of a symmetrical WXYZ pattern. All right, let's jump and just look at last week. Now, I believe I did get everything up to date in the stocks in play. I noticed there's 4 of them I don't have in there, which I'll go back and add before the end of the afternoon. Let's come down to our weekly charts, and I'm going to start off with Microsoft. We're having a little bit of a pullback. I do not have a long position on Microsoft. Part of the reason is because I want to see how this morning played out, just because I wanted to see how some of the tech earnings came out. So we break below this 499.25. Doesn't mean it doesn't beat. That's the challenging part. We know this in the Mag 7 is they like to pull back just the day before earnings, and they blow through the roof. One reason I think that might be the case is because we have like a confirming high in RSI. So what are we looking for? At least one more higher high, or one more divergent higher high in price and a lower high in RSI. But ultimately, my target, regardless of whether this is an impulse leg, which is what it's measured as now, or it becomes a ending diagonal, it's still going to land about the same place at 541. So this drawdown is only going to affect us as far as our entry. All right, looking at Google now, I do have a little piece on in 197s, longer term, really strong visual on Google here. I like it better than most of the Mag 7s. Reason is because the thesis for me is that they win in AI. They just have too many resources over everyone else. They can pay for absolutely the best mind. Not that Meta can't. It's just that Google has that so much of a bigger moat than pretty much any of the other AI has to adapt AI to its different product. And what they've done with the only thing that I find that their AI doesn't do is what OpenAI does, because it doesn't necessarily. It's more of a chat bot, but it could become what OpenAI is, where you can have this ongoing dialogue with OpenAI like I have, which I find to be extremely constructive because it remembers all of our conversations like we're in the room. And, that is not something that Google has tapped into yet. But if they do that, it's a game changer. Then all bets are off for the rest of the AI. I would say that they just dominate the field quickly like that. But, for earnings here, there's a chance we push past 195 to even 200 on this right at earnings. So it's not too late to put a piece on. I might be more considerate of 175 cash secured puts right where we are. But that's just my overall view. And the way I look at this is a diamond, right? And just like wedges, diamonds, typically resolve to the upside. Not quite the same percentage as wedges. And wedges means where you have kind of an arrow, not an ascending wedge or a descending wedge. The diamonds tend to resolve to the upside. It's like 68% of the time versus 70+% of the time on the wedges. So I think it'll head towards the upside. Now let's look at AMT. Now right now it's going to have my entry. I like the 9/1/240 calls. They were at 489 a contract, probably 550 here, maybe a little bit more. Let me come down to my weekly chart. And when there's a bunch of labels on the charts, it's easy to get lost quickly. All right, so ultimately I think the target on this is going to be around 369. Coming back out to the monthly on this one, I like this for a longer term position. And I don't know why I looked at it. I hadn't looked at real estate in quite a while, and something hit me and I looked at it. That's one reason I have two names in this week's swing trade notes, because I like them both for longer term position trades, because the dust is settled and American Tower is coming out of this. Now, I don't know how much of that has to do with their AST Space Mobile holdings. I don't know what that factor is, but I'm sure it's significant. And obviously, the better AST Space Mobile does, I think the better that this would perform as well. So, all right, Roku. I'm going to come in and say I was thinking about buying on the dip, but with this breakout, as long as that wick on that candle holds at that 83.57, whatever it is, our earnings is the only challenge with this, because if it misses, we're going to take a hit. So the earnings are July 31st. So keep that in mind with your position size. Right now, my risk anchor is the wick of the prior general candle and the 52.43. So, our first target is going to be this 1618 right here. Reason is because we're going to get this extension. As long as that wick holds that 83.23 roughly, there's absolutely no reason we shouldn't break back out here, because it just has that structural look. Came up here and tested the highs, rejected, got a nice push in volume. Now we got more of a squeeze look. So we're pumping here on a little less volume, which is a good thing. We're also confirming to some degree in RSI. So structurally, I like this for play to the upside. I probably prefer cash secured puts on this around 80 or 75 until we get back above this wick, roughly 104, which is quite a ways up, and then just migrate towards that. The DLR, I want to look at the weekly on this one to start off with. Now, again, we wicked up, we broke out here, right? So now my anchors on this one are that 85.76 floor and 168.60, the base of that general candle. I'm looking at resistance here on DLR only because there's nothing else up there. So I would think we get a decent pullback, maybe to even right around where this speed line is. So if we get back up to that 198, I would say we pull back 15 or 20 bucks would just be much. Then, once we break above that, then it's open skies really to 218. And if you look at the slope here, I mean, we could accelerate right up to the 1618 in an elongated 3, which, is typically the longest wave anyways. So I like the September 170 cash secured puts, paying about $4.95 a contract. And again, if your book has some room, 185 September calls could also work. All right, now Rio just totally gapped this morning on copper. That was really my thought on this with the copper play. So I'm thinking you got to come out to the monthly really to see this 4-year basically ascending wedge that we've been in. It hasn't broken out yet. However, this general was just a little bit too deep here in the beginning. Even though we rejected here, so there's a possibility we reject. So run some tight stops on that. And I wouldn't give it much more than $4, $3 on it. So first anchors at 53.82 and 58.27 is how I would look at it. I do like cash secured puts on this one as well, just because I think it's a little safer entry. Go towards the floor right here. So roughly about 57 or 55s in that range, depending on what they're paying. All right, let's take a look at Tesla. Now, I still don't have a position on Tesla. Same reason I don't have a position on Microsoft, and same reason I don't have a position on in Apple. Well, I have a small position on Microsoft, but they're just runners. I just wasn't getting what I wanted in volume and the strikes. I wish we had more strikes in Tesla than we do, even though they are heavy. And they're at the top of it's not acting like it has in the past when earnings were going to totally beat. Because you tend to see some insider trading on Tesla. Too many people talk to Elon. I'm waiting till I get some kind of tell to jump on board here. I think we're going to hit a low of 348 for earnings, and we could be all the way up to 430, depending on how much they beat. So maybe I'll just miss that one. I'm only chasing what I really like, where I have a great thesis. Now, I had noted yesterday, move your anchor for your second up to 102.72. And this morning we would have been stopped out of 50% if I had a position long on that. And let's take a look at AMD. Now we're pushing here. We have 157.50 calls for July 25th. They expire Friday. So I get up to this. I want to get a little above this 158, 159, and we got a little bit of a wick there, but it hasn't taken it out. I'm sort of going to give it a little more room because we're confirming on RSI. Might be the wrong move in this market if we get some kind of spook in earnings tonight. So I'll revisit it at the end of the day and I'll post it in chat if I'm sticking with it. But right now my anchor is 54.57 and 152.85. All right, let's look at Galaxy. Now I would raise up to the base of the wick or close to the base of the wick to 27.27 from 8.20. Realize equality for me here is the most important thing that I think I'm looking at. This is what I'm viewing as our A, obviously our B and C is equal. So we should get up to about the 100 fib, I would think. Pretty viable as far as the look here. So there's another $6 on this to the upside. I don't like this candle. So, if you are well in the money, I'm going to always say this. I have two rules. If you're up several 100% for the year, obviously you can leave a little room of risk there. However, if you're only up 25% out of the year, and this is one of your best trades from our entry down here at $19, I would be taking some profits. So it really depends on exactly what your book looks like and how well you've done for the year or how well you've done for the month or the week, etc. Depending on how you factor that. That all depends on how I would book profits with a trade like this, even though it has substantial upside. The reality is, until you've started to achieve those higher percentage gains, you want to book your profits when you have them and then cut your losers quick. That's the best way to do it until that changes for you. All right. Now, JPM, we still have the cash secured puts on. We closed out the calls, lost about 6% on those. So, hey, it's what it is. But right now, cash secured puts are working. They don't expire till next month, so that's where we're at. Now, Apple, again, I noted I didn't, it's just not doing anything right here. It hasn't taken out, I mean, it's nothing, actually probably the best thing here would be 200 cash secured puts into earnings. I don't think it does bad in earnings, but in the grand scheme of, this earnings to me has been a mixed bag already because we have more names that are not as euphoric as they were last quarter. So, I mean, this could be the earnings that sort of stalls us out, especially if the Mag 7 doesn't perform. So just in that mindset, it's not a cheap cash secured put, $200 a contract. But again, it's not too expensive. So I would look at the size of your book and make that decision. However, I don't have a position on here, and I at the moment I don't think I'm going to add it into earnings. But I may, at the end of the day, if I get some decent flow in there, I might jump on it. But the anchors are 164.52 and 207.54. And now I left team here because it's really done nothing wrong, but it's stuck here. It's going to launch. It's just whether it's going to launch here, here, or here. I can't tell you yet because these kind of basing patterns that occur, they're not as clean as these basing patterns. When you have this clean divergence, clean confirming low and divergence, it pretty much is set in stone. Once you have that exhaustion candle, it's done. They're going to pick it up. Institutions will jump in and start buying it. They're not as aggressive right here. They bought a little here, right? But we didn't get a divergent low below there. It would have been better if we got one more lower low in price here with a higher low in RSI. And then it probably would have launched a little better than it has. But it's still done nothing wrong. And we probably will move and put a position on there at some point. Nothing's changed in sound. It was just a yield play. We sold the October $15 calls. And we're just sitting there, done nothing wrong, sticking right around that 12 bucks, fine for me. All right, got a little bid on the internet, have been posting trade setups here for a potential breakout, which is always good news. I always love it when they find it after me. I always think that's a great thing. That means I'm doing something right. All right, so the anchors on this one are 219 and 524. Don't plan on changing anything on those. 5 and the 750 there. Oh, and DS, nothing's changed actually. So nothing's changed there. Anchors are the same, 57 and 203. A Big Sky, we got a stop yesterday. Now, I like it back at the 618. So that's the reason this is here. I sort of left it because I wanted to review it. Because you should have been stopped here on 50%. And then your trailing stop should have taken you out on the balance. Somewhere around 23, 22.50, somewhere in that range. There's a potential we get back to 17. I want to buy it back. So I would not even hesitate to put in a few good to cancel orders at 17.50, 17, and 16.50. I don't think it breaks too much below this base of the shelf. Reason is because this is kind of buyer total exhaustion here, and we got that on this wick as well. So I don't think we go this deep, but we could. So we just realize whatever you're buying at, we could push down to 13 bucks. So make sure you have a piece to add some at that point. But if I was long here, I would be trimming or at least selling covered calls if you're still holding and didn't take profits just. All right, let's look at IBIT. Done nothing wrong. We're not pulling back. Flag's holding still. It's done nothing wrong. Launching pad is going to come back out. Should be equal to this leg. So I'm just going to use an ABC real quick to measure that. Just giving you a visual because it works for me. Well, actually, I'm going to use that because it's still, C is going to put us up to, about 76. If it's just an ABC pattern and not an impulse. If it's an impulse leg, it'll do something more like this. 3 will come up to probably 126. This will be shy of the 100 fib, and this will push probably up to the 1618 around 97. So either case, it has some significant upside as far as I'm concerned. Hyatt, done nothing wrong. I would leave my stop a little deeper on this. The reason is I like that flag that's building out. That's a very euphoric flag, all right? When that launches, we're going to this 1618. Not only that, the symmetry on this wave is near perfect when you look at this. And the reason I'm saying is because this is our 1, this is our 2. This probably is an ABC, so this is A, this is B, and then we get a C, right? And then we get a 5 looking up there. So we could push all the way up to the 200 fib potentially on this as far as recovery. So we could break out the highs. Now, actually, I didn't even look and see when earnings was on this, but that may have been why we saw the insiders buying as much as they bought. Because basically the Hyatts bought a bunch of shares, and it was blocks. I mean, 25 million plus. And it caught my attention because it was just a total outlier, and the RSI was like a perfect setup. We got what I call glaring and high and tight, even though it's a flush. When you have your divergent, your confirming low, and then your divergent low come in on the candle right below that, and then you put in a little higher low in RSI on your next candle, that typically is a fast turnaround. You get this launching pad like we had there, which is just a beautiful thing. I mean, the question is, are you looking at that symbol at the time when those conditions are there? Because there really is not a screener or a method to scan thousands of stocks currently to see that. All right. Hopefully I'm successful at getting Sentinel to recognize those, but now let's look at HIMS. Now this, I really was wishing I had when I first looked at this morning, that I had some calls on here. I've got that strangle place on, at 45. It's really done nothing wrong, All right, let's look at Unity. Now we got a wick off candle. It didn't take out I had suggested we move up to 35 yesterday. So if you're holding it, I'd hold it because it's a flag. I'd probably give it a little more room. Basically a 5-wave. So we get a flag that builds out here in this range. As long as we don't get below this 30 bucks roughly, really I want to stay above this wick. We should get some kind of an equal move to the upside, which will push us way the heck past. And all of these tech-related names that are getting a nice bid. I mean, they're just, the institutions are buying them. There's, the flow is so tight that if you're on the right side of these trades, you can't be wrong. And fortunately, we've been on the right side of a number of them. And this is one of those. So I can see a $53 price here really by the end of October. It'll be pretty quick. So that's my thought. Again, that 1533 here for Unity and 3267 is what I'd hold now. Now, JLBY, I'd be taking some profits on this. Reason is this is way overdone. However, I want to come back to that tech statement I made earlier. I don't know how much I would trim, but in reality, this thing has 360.18 fib written all over it for an extension up there to 27.91. So that's the challenging part, because this is, if I'm incorrect, but I believe it is aviation drones. Anchor is 496 and 1665. Look at SNPS. Now, it's just not slowed down here. This was just a beautiful trade. Those options just moved. They're the initial entry options at 516 to 616 have moved nearly 250%. That's just a nice trade on a $500 stock. Just a beautiful trade. All right, so I still think we're going to head up. If this is an ABC, it'll end about the 150 fib. If this is an impulse leg, it's got everybody's attention too. So if this is 1, this becomes 3. 5 will back, 3 will back test here. So we're probably looking up to at least the 200, 749 from here. So we're talking another 140 bucks from where we are potentially to the upside. So just every candle, take a little piece off. If you bought common shares, if you bought calls, trim a little bit. I don't know how many contracts you bought, but I would probably on this one, just because of understanding how euphoric this move is for this tape. Something's going on with this in AI. It has to be some integration somewhere. And I don't necessarily have time to go look at all the macro and micro, but this looks to me like it's just a total trend change. So 3 could push all the way up to the 200 fib by itself. Just looking at the history of the tape, we really don't have that kind of euphoric move in this tape. So this is a demeanor change for me. Extremely bullish. On top of that, if we look at where the volume came in, look at the volume on this candle. We've had no kind of volume like this in the history of this tape, period. It's come in on these candles. That's just absolutely huge. All right, so that's my 2 cents there. All right, now I wanted to look at qubits because, again, quantum is getting a bid, and this really has done nothing wrong. Broke out, tested it. The only thing I don't like is this here. See what it did here? Broke out, back tested it, put a little wick up, and then came back. So I'm more inclined to get excited back at 15 bucks. That's just my thought. This is our confirmed. So this is drive 2. This whole drive here is 1. This is mound 1. We're putting in mound 2. So we should have, if we look at this low here, this peaking drive 1, peaking drive 2, this could be peaking drive 3. It's not symmetrical to this, so it's a little more euphoric. Having a hard time reading that box there, but it has broken out. So, technically, as long as that lower side of this candle holds at 1630, it's done nothing wrong for a breakout. It is structurally looking at. All right, CoreWeave, somebody be to look at. Nice divergence here. I got to come down to the 4 hour on this one. I actually like it here, but I like it at 114.43 better. Earnings are August 14th. Keep that in mind. I would run, I know at least one of you has cash secured puts, probably here. Remember right? 120, 125, something like that. At this point, it's still done nothing wrong, with where our price is. So you're probably just decaying a little bit, but not too much. So I use that 50-30 anchor and 114. Here I get interested in trying to chase some calls or maybe put on some puts. My stop for that would be down on the wick of where this flag was at 105, from this little breakout here that we took this out. I do not want it to come below this again. If so, all the long bets are off, because then it's going to be a reversion to the mean and it will come back and at least test the 64, and it'll probably come back and test this floor to 44. All right, now I'm just going to run through these names. Actually, let me back test because I wrote something down here. I like the 125 cash secured puts. They were at 27. I believe it was October. The 115 cash secured puts were at 2040. So I'm actually watching those prices now because I was interested in adding there. Let's look at AEVA. I think it has a little bit lower, maybe 24 bucks. Not much from where we are. I mean, it's less than $1.50, a little more than $1, but it could come right down to that trend line. I would think that speed line holds because I basically went from the base, used this anchor. So I used the 256 and the 1385. I'm not sure what these guys do, but these descending wedges, even though it's a little distorted, tend to be good breakouts. The only quagmire I have, it'd been better here, and obviously it did, got a good breakout. If you're just using that wedge, got a good breakout. But now this is where our wedge is. So it's got a little room. I mean, it's basically right at that, whether it's here, or way the heck down here, I can't tell you. That's the problem with the descending wedge. Until it gets really tight, quite often you don't get the catalyst that you think you're going to get. RSI is really telling me nothing. We sort of have a firming low here. So a divergent lower low in price, which we've already gotten, meets the criteria. However, these tend to be a little noisy. I don't spend as much time on those kind of wedges, so it's not standing out to me. Now it would, like right here. For example, American Tower, that stood out because it was at the bottom of a pattern. It was easily recognizable, etc. Okay, let's look at PDYN. Now we've totally flushed back here. I don't want to say reversion to the mean. The challenging part, if you're still in it, it's really hard to hold here. I would tighten up my stop if I was holding. I don't have a position on here anymore. I would move up my second anchor right to that wick. And if it takes me out, it takes me out. That's the way I would look at it, because this is price rejection. It's not a retrace because you didn't get this, okay? So the most likely outcome here is that this is an ABC. So you might get a little better price exit. So you're going to look, back test is probably to the base of this ledge or the top of that ledge. So roughly 35, 40%. And then we may get a C down here for equality. So I would get re-interested in PDYN at, roughly $8 is my thought. Just absolutely blew up. Great job at picking this, Aditi. Just great job. And you've got follow-through volume on this, which makes it challenging to cut it. So the only thing I can suggest is that you roll up. So let me come out to the weekly. Let me explain what I mean roll up. So if you're in calls, take profit on your current calls, roll up to like 23 or 25s, go out with some time. However, your initial bet is only going to be 25% of your gain. So you take your risk completely off of the table and roll up that way. And that way you don't have any risk on the table. It's house money. It's the way I look at it. If it keeps running, you can continue chasing. So now let's look at the structure here. The way I see this is probably 1, this is 2, this is 5. So this is our correct. So we have clear impulse just with that push. So this is the count that we're looking at. So this is our 1. Chances are a 3 pushes up to the 1618, and then we head towards 200. The question is, what happens here? Okay, so it's confirming. So it's done nothing wrong to the upside. It's just this candle is a huge general candle, but it has done this before. Let's go back to the tape. I'm going to go back for a second because I want to make sure I point this out. because obviously you're judging your own risk. But look at how many legs we had here. This is leg one. This is here. We got our first push. We don't have a candle this aggressive. The only candle is here. We got one more push. Here it was from 44 to 53 bucks. So it was a $7 move. So assuming we have a $7 move from our high here, puts us at least 29. So you're going to get at least one more push looking at this. And this retrace may not be as deep as we would expect. Just looking at the history, I mean, it's got a lot of noise there. It depends on the volume. We really don't have more volume than here. And you look at your volume coming back over here, look at how much more aggressive the volume was down here at 576. So obviously this has some news and it's moving based on that volume. So I would not blame you if you hold this, if you have the room in your P&L and your profits. That would just be my 2 cents. All right, let's look at Cigna. Well, looks like an ABC or an impulse wave down to me, meaning ABC, like this is ABC of ABC. So we'll get another ABC down here. That's my thought. However, you could chase above 306, but to me, it looks like we're going to pull back to roughly about 230. Let me go out to the monthly, just give you a better visual. Mainly, I'm going back to see if I have any notes here. Back tested to the 61.8, which is euphoric. It's head and shoulders, left shoulder, head, right shoulder. So even if we push a little bit higher and then come off, I mean, it could be a bull trap visual. Believe it or not, the algos actually do bull traps and bear traps. They actually trade them on either side. So we're always playing against that. So we want to visually recognize those patterns because their AI at this point is also recognizing them. And a head and shoulders easily measures to the floor at 192. All right, NXPI, nice little pop. I'm going to come out to the weekly on this one. However, I think it's waning. I'm just looking at my count again. So we have grouping. You've got one more push. This is peaking drive 1. This was peaking drive 2. So you got one more push up to about 256, I would think. Now I have my anchor giving it some room here. Now I have to go back to the monthly to look at that. See it? So I have it at 113.31 and 207.22. I'm going to come back to the weekly because you could also do something a little different on this one. Just because this is your trend and it really testing it, you can just give it a little more room. I'm just counting the candles. 1, 2, 3 candles. 1, 2, 3 candles. Maybe it gets a fourth candle. Then if it's going to keep going, it should. So in that scenario, if you use that as your anchors, which is viable, by the way, you can step up. I just like to use that divergent low because it consistently works for me. I don't have to change with different looks or different setups, or it's consistent across the board. If I go for my divergent low and I measure, that's just something that works for me. And, whatever works for you is the most important thing as well. So in that case, it would be an anchor of 148.09 and 216.02. All right, looking at UUU, man, that just blew up. It just absolutely blew up. We're confirming it's not done. I see 3 peaks here possibly. I'm considering this is peak 1, peak 2, peak 3. So it's probably going to go up to at least 11 bucks. But I'm going to come out to the monthly on this chart again and see. Well, in the history of this tape, when we have had rare earth processing in the United States, where in the heck was this? I don't know how viable that. I don't usually like to show that much noise to the upside, but I don't own a piece, so at $9, I would say 20% in some dated calls, maybe 45%, 10% maybe, and do 30, 35s. And I'm talking going out to like June, July next year, because if we're going to have full adoption of rare earth processing in the United States, I couldn't find an argument when I looked, and I actually had this chat with Sentinel and looked back at the history. There really is not an argument for why we couldn't go back there. There really isn't. Because the only reason this really declined was because all of it was pushed offshore, and we've been there for so many years. What have we been there since 2010? So, for the last 15 years, this UUU, Energy Fuels, has really not had a market here in the United States, except for some specialty products. So that's my 2 cents. So our current anchor is 78 cents and 787 is what I'm currently using. All right, let's look at Irene. Let me come back down to the weekly. Actually, I'm going to do the 4-hour on this one because it's a short tape. Now, I've got a pretty broad anchor on this 513 and 1394. And forgive me, I'm going to have to go back out in time a little bit because I'm trying to remember what I had here. Heck, when you look at 50 charts, set them up, even though we don't quite have 50 charts here, it's a lot of charts. I don't remember everything. Okay, so we've got peaking drive 1. This is peaking drive 2. We're getting a 3. That could be a 3. We could be done at the 20. What I wanted to sort of raise the awareness. Where it's failed, let me come in and bring that in. So for me, it's going to fail if this prior flag here fails. So this little thingy right here, so we break below this 1632. That was it. That was done. Then we're going to cascade back down to about 12 or 10 bucks, somewhere in there. So that's how I would manage Irene. All right. All right. Now D-nut. And I think the 618 is totally viable here at $8 based on the bid. Now it's given back today's volume a little bit, wicked up all over the news on social media. It broke above what I had noted as full size at 459. Gap fill is very viable at 7. Confirming in RSI, I still like it. I'm going to come down. I want to look and see what the 4-hour looks like as far as tape. 1 hour. Yeah, that was that. Okay, so we're wicking off. I'm going to come down to the 30-minute on this one. You won't see me do this very much in this group, but at least for this purpose, looking at RSI, kind of a double top. So we put in our first confirming high here, second confirming high. It's going to gap fill first, unfortunately. I like it. Trying to put a label there. Okay, well, we're just going to use this label because it worked. So back at $4, 418. I like it there. All right, let's look at quantum scope. Let me come out to my weekly on this one. All right, so I've got buy any dip to $9 on this, which basically is this ledge. I think we pull back. A lot of it has to do, note where I have my circles. So we peaked and flushed, peaked, flush, peaked and flush, and there's a couple of other ones I didn't highlight. Main point is when we're overdone in RSI, what's it like to do? Well, if the last 3 peaks it flushed and put in no divergence, what's the most likely outcome? I'm going to go back to my thesis on every tape as an MO, and that's what I see here. I'd like to say differently, but I would think that we pull back. I'm going to go down to the 4-hour for a second on this one, just so I get a visual of where we are in the RSI. Make sure I'm not wrong. So we have a double top in that RSI. It's toppy. I mean, it might get to the 61.8, 1827. It depends on where I owned it, or what I owned would be how I would handle that at this point, but I'd probably be taking profits. And if I was well in the money, like if you rode this from $6 to $12, right? You got $6 in the money. I might take $1.50 or $2 of that and roll up to $18 calls in September, whatever those would cost. That's way the heck up there. But if we're going to continue to take off, it'll keep going. Or you could do $15 calls even. Cost you a little more. It's not as much of a moonshot, but a moonshot with a name or a tape this low if it's going to continue to pull out. Okay, let me look at Sentinel 1 at $8 is where you'd want to buy again, or $10, then maybe down around $6 or $7.50 in that range. If you're going to scale in with calls, if not, when you get the breakout, you make sure you got a full position size back on at 15 and just take the structure. That's how I would look at that. Hopefully I answered your question. All right, Sentinel 1, I don't think I got worked up. Out, make sure I didn't. Nice divergence on the base. XABC probably, WXYZ probably. So it does have a chance of bouncing here, I would think. So yeah, the most viable target is back up to around 29, I would say. It's got this sort of ascending wedge as well. Not really an aggressive one. It's more of a flat. I'm not a fan of trading flat. I think I've expressed that. So I would much prefer, but it's a nice trade from, I'm not going to say it's not, from 21 to 29. This wick off I don't like here at resistance. Needs to really get above this. I would probably, if I was going to take a stab at this one, I'd sell $16 cash secured puts and then maybe a few at the money September or $20 calls. Just a few. Just to get a piece on there so you could ride it a little bit if you wanted to. Hopefully I answered your question on that one. All right, now this lithium really has a lot of potential. We have multiple levels. So first target is 430. Risk is going to be that 238. So 202 and 238, that's my max risk. Breaks below there, I'd be out because then it probably is going to continue over. But I don't think it does with this. I think either we're going to build out. We had a good rejection here, but it likes to reject. Here again, I'm going to come back and say a tape has an MO. What does it like to do? It like buyer exhaustion just comes totally into this tape on every route. Boom. I mean, look at some of these wicks off. I mean, extreme, right? So we haven't gotten that here. We got it here. So it's not, even though it's declining in volume, if you measured each of these wicks, it's declining. So yeah, that could be the wick off and then it could flush. So that's one reason I would manage tight stop. But $4 calls, October, shouldn't be too expensive, or you can push to 450 or 5, depending on what they have. Now, the next level I have, and I'm just doing on the levels. And what I did is I measured the trough, the peak, the trough, right? The trough, the peak, the trough, which is the same one. The trough, the peak, the trough. Okay, so it's given me the Fibonacci levels based on the history of the tape, et cetera, et cetera. So obviously, this is where the trade gets you for it. Once it gets above here and then starts testing this range around $7, then it's going to move. So it'll move $4 or $5 above $7 here on this. The tape is just printing it for you. Our Planeteer has done nothing wrong, but I think a breakdown's that. I think we get to the 168, we get the ABC. And that basically is the symmetry here of what our first mound is, second mound, how similar the tape is, how the pushes are similar with the exception of this one. So, right now I would be running 50% of that general at 147.67 is my trailing stop, 135.28. Because at 128, we can buy it back. $22 was a nice move to the downside to buy something back. And I'm real interested in catching that. So I will be watching this one like a hawk. But of course, by all means, set your own alerts so you see that. But that's how I would manage Palantir at this point, even though I think it has much more upside. I do. And there's nothing that would prohibit, and I come back and I always do these disclaimers because I don't know. All I'm doing is reading what the tape tells me, and then I'm projecting that to you guys. And that really is the best I could do. I'm not looking into this crystal ball. Though my accuracy is good, right? It's, there are a lot of things. I mean, AEHR is an example. I did not see that breakup coming out after that kind of gap. I did not see that. So, that is one reason I always try when a tape has room. For example, mound 1, we're in mound 2. I know mound 3 is coming. The question is, do I really want to ride out this heat if I have a good position size for $22 on a chance I get to 190? Or do I want to take some profits and restructure the trade? I would say restructure the trade. And generally, when I take profits on a trade like this, what I want to do is restructure, take a piece of my gain so all of my risk is off the table. And I want to roll up on the strike. So maybe I want to come out and do November or maybe December 170 calls because they should be a little cheaper at 150. However, you might want to roll back time because the math might not work based on what your gain was from your current position to really roll that large of a position. And that's one reason I think so much about position size. And I like to stay in a certain size box because the math works for me when I want to roll up when I'm in a trade. If I get into a bunch of large trades and it's not feasible to roll up because I don't have the 250 grand in room, then, obviously I'm not putting that trade on for that reason. So structurally, you want to think about those boxes as you're building out your trade. All right, let's look at BMNI. I don't have this one worked up either. However, looking at this, we are confirming on the RSI. So I'm going to say one more higher high, at least around 185 at some point. Come back out and see what I can't tell you why I didn't have this one worked up. I don't. Bitmine. Okay, I can tell you why. The wick off. I didn't like it. Total buyers exhaustion as I'm looking at a tape that is normal. So there was news, it got bought, and then it flushed back down to $50. It's telling you that whoever bought it is out. So yet your confirmed high, notice how my opinion just changes so quickly once I come down to the daily, see what it's looking like. That's flatlining here. Would be worth a shot, though. I will say that. Maybe there's a recovery. Maybe the news wasn't real. Above that, I changed my label color here, is up. I don't know. I must have too much stuff open. My label's not popping. So roughly at that, above that 59.98, then I get interested long again. That would be the main point. MVIS. Man, I thought I worked up all the chart. Guess I didn't get to them. I guess I missed a bunch. No interest long until it gets above 301. I mean, you could, I don't know but this is just a basing pattern to me. We've seen it in RSI and it's fading in price. So the RSI structure is saying the same. You basically have this range between 50 and then 29, right? So unless that RSI gets euphoric and breaks above there and we still are fading in price, most likely thing is this continues. Then I come back and look at this tape here from 7/2/2012. It held that base to 4/1 of 20 for 8 years. So I see this kind of base forming here, like here, and I'm like, okay, well, the MO on this tape is it likes to hold that base. I'm not really interested until I have a good reason to get long, and the only good reason would be if it gets back above that $3. All right, then we were going to look at VIX. Well, it's done nothing wrong. It's squeezing into the market, so we need some kind of stellar bad news at this point for it to switch directions. However, I'm going to say this, we are confirming here, and then we do have a divergent low. So if we look at the history of these pushes, it likes 3 pushes. So this is 1, 2, it's got number 3. So these equality here. I would say we're close. At the most, we maybe have one more mound down here. I know somebody had asked me about this one as far as adding positions. I don't remember the exact question, but somebody had asked. So going from our next low, probably tightens up a little bit. So maybe $43 be our low. Somebody put notes there and let's revisit it at $43. If not, we don't really want to add anything until this wick gets taken out at 45. That really is sort of my thought here. ENVX, nice flag here. I'm going to come out to the monthly on this one, I believe. The reason I want to see the bigger picture on this. So this looks very much like Rio, been in that 4-year base, but in this case, it's popped its head above. Let me bring in a little triangle liney thingy. Really doesn't confirm the move until it breaks above 17. Then it targets $24. Nice move though. Nice follow through with the generals. Needs to really clear this here though. It's challenging. Could sell some 12 or 12.50 cash secured puts on this. It's not a big bet. We come down to the 4-hour. I'm just seeing if I like anything else here for some reason. Okay, we had some clean rejection on price. Nice topping, nice formation. Structurally, our divergent low is here. This is what we measured off of. Peaking drive 1, 2, 3. So this is, so mound structure is pretty broad. So we got 3 little mounds in there. And just to be quick on time, I'm just going to move this up, roll up my next fib. This is how I do it quickly. We could have one more leg here. Reason I'm peaking drive 1, peaking drive 2. You get a third one here. Then it rolls over. So, I mean, it has potential to $18 here. It is viable. Not a bad spot to give it a shot. Actually, right at the money, $15 calls September. Little piece. I like the volume here. I just like the way it looks. That's where I'm at. All right, let's look at Rocket Labs. Just building out display. I'm going to come out to the monthly on this one too, because this is just where, and this, well, maybe I can't do it on the monthly on this one. You can clearly see the institutions buying, right? You have this flush, and they just jumped in here. Once it back tested this shelf, this demand zone, right to the demand zone. Look at that, almost to a wick. Little tighter. They were really trying to buy it. This volume came in, took it out. So this is peaking drive 2. It's probably not done. It probably pushes to the 1618, and then we get it back. So this flag is, we got a flag here. So this is drive. Actually, let me bring the tool out, draw it for you. So this is drive 1. This would be drive 2, or drive 3, and drive 5. I mean, really could push all the way up to the 200 fib. A little more, less euphoric, I think, with a candle like this. So the challenging part is, do you trim or not here? And I'm going to leave that up to you. RSI is clean. Nice confirming high. Mound 1, mound 2. We're getting a third mound here, which will have a lower high in RSI, probably below 74. Risk anchors I've got marked are 1471 and 4635. All right, let's just hit SMCI. Done nothing wrong, right? Now, I'd be running my anchor off of this prior grid general. Well, it's not quite a full general, but 4878 and 2760. And with AMD moving, and the question is how much tariffs are going to affect them. That's the rumor mill, and I think that's the reason this hasn't launched already. But I think the big catalyst is going to be in the first quarter print of the AI chip that haven't been scheduled for delivery yet. Because all of 2025 is currently scheduled for delivery, and they have all of their server racks ordered. The only thing that's different is that SMCI has that liquid cooled rack they have out, which really hasn't hit any of the data centers. So that there might be some upsells that I don't see there, but I'm thinking 6 months out on this before we break above the 78.6 at 66.41. All right, somebody wanted me to look at AUS. I'm out. I don't have a position. Wish I did still. Actually, I've said that more this year than I think I have in my entire career. So, we've got this. So I'm going to pull this out because this wave probably is not accurate. I'm going to call this 1. I'm going to call this 3, probably the 300 fib. We've already pushed this. Forgive me, I'm just moving it out of the way for a second. And that measures right up to the 300 fib on it. Honestly, I haven't looked at AMTX. Probably should. Okay, so here I'm the AST Space Mobile. There was some contract that came out. I'm not recalling, it was a grouping. So roughly 201 and 4244. I'm looking at this as peaking drive 1, peaking drive 2 maybe, or grouping 1. So this could actually just be, and we could actually measure this and say this is 1. That would be extremely euphoric to the upside. I don't have it on this view here, but that puts us up to potentially the $100 from right here. Broader flag, not as this. Actually, whenever you have a retrace like this, and you have a clean 5-wave retrace here, I mean clean, and you got that shallow 5, those are launching pads. You have that squeeze, and then you see the squeeze in volume. It's where you're pushing price while volume is declining. Which is a good thing. So that's my take on that. And again, just reviewing those. Use that 201 anchor and that 4244. All right, let's look at ASAN, Sana. Like it for a shot back to the gap, $16, roughly $17, 618. Yeah, like it right there. 1318 is what I would use. You actually can push it up if you want to 1370 because there's plenty of room there. That's my 2 cents, done nothing wrong. Now, CRM, I see it breaking down, but how it's sort of making me a liar because it filled that gap right there. However, that was noted because it broke above that 262.95. I think I said that last week or the week before. Then this potentially is an ABC in the other direction. And one reason flats to me, just so you guys understand my thinking, is there are so many combinations in the flat. It is nowhere near as predictable for me as a confirming level. So I stick where I have the advantage. If I can just stay with the names in the tape where I have a higher degree of confidence that this trade has found its bottom or found its top, then obviously I'm better off because my win rate's higher. When you get your win rate over 70%, the game totally changes for you. Most of the time, most traders or investors struggle. They have 50% gains on these stocks, and then they have 20, 30, or 40% losses on these stocks, and some worse. Some have 50% losses on these stocks. Taking a fib tool to that, I would say that this measures a minimum to roughly 295 from here is what I would say is my target. All right, I'm coming back to see where am I. Going once? Lunar. Okay, I knew somebody would throw something up. It waited for me to say once. I don't know why I pulled that. It was in my list. It's done nothing wrong. Probably because it stopped us out here and I didn't bring it back. It's done nothing wrong here. I mean, right here, this goes back a little ways. Got plenty of room. It's quickly. Quality puts us up at 18 on, if that is an ABC. If it's an impulse leg, it'll be a little bit higher. 3 will probably extend to the 150, 236, 200 later on. Definitely. It's done nothing wrong here. MRNA. I've got that one still in there. No, maybe I pulled it. Now, I closed out my calls. Our main reason it wasn't going anywhere. Now, of course, it's going exactly what I meant. Any of my picks typically go. I may not own them, but hey. Got to have rules, though. Okay, it's confirming. I like the idea of that. Actually, there's nothing wrong here to add something on this now because I'd be in a full position size above 38. 51, 61.8 back is totally viable here. It's got to clear this 48, so you want to watch resistance there, how we diverge. The biggest problem above that 23.6 is this RSI structure. It's really toppy. So it's shallow, 2 definitive peaking drives. Kind of got one here and one here in this. So its max is going to be a third one. Then it probably pulls back to about the 57. So you may have 3 weeks of candles to the upside, maybe at the most. AMTX, add flag breakout. Going to keep going. So if we just look here, measure up 618. It's going to be a minimum of 423. But structurally, this is probably an impulse. It's making me a liar. Didn't follow the MO. However, it's not really done yet either, because if you look at this here, I mean, it could still keep fading. But 3, it does have some significant ups. And obviously, this is Kirk's baby. So, I mean, we could see 1618 easy, $6 again on this. However, it rejects higher prices here. It doesn't get above this 364, right? Then it's probably doing what it just did here. The reason is because the MO is too strong. Peaking drive and flushes. Looks very similar to me. Very similar to me here, except for here we got a double top in RSI, but still it faded. Here is the main divergence we got towards our high. This was a confirming high. Wasn't the highest high though, because this was way the heck back over here. But structurally, it has room up to $6 easy. So that's my 2 cents. Anything else, folks? All right, great trading. Until next time then. You guys are welcome.